किसका एफएम क्लास क्यों नहीं अपलोड हो रहा है? सैटरडे वाला क्लास तो सर को बोलना गूगल ड्राइव में डालेंगे। सर इंक्रिप्ट कर रहे हैं तो फिर क्यों लेट हो रहा है? क्यों? पेनड्राइव में कॉपी करके दे रहे हैं तो ले ले। क्यों क्या मंडे नहीं आया सर? हम्म? हेलो। Very good morning, everyone. How are you all? Everyone fine. So today we'll take AS revision, which we have decided. We'll take AS4, AS4, AS29. Correct. So today we'll take AS4. 1 minute. AS4, AS29, AS19, AS20, and if time permit, then we'll take AS17 also. This will be our target. Okay. Today, can we start? Let us start with AS4. AS4. So what is the title of AS4? Contingencies and event occurring after balance sheet date. So it has two topic, contingencies, but now we know that with the introduction of AS29, contingencies is dealt in AS29. Contingencies means it may give rise to provision, contingent liability, etc. So that now is covered where in AS29, but only to the extent of contingencies related to doubtful debt is covered in AS4. Means whenever a question is come for provision for doubtful debt, so don't give your answer as per AS29. Give your answer as per AS4. Correct? And they may ask a question for provision for doubtful debt. So don't be confused. Provision. So all provisions are not covered in AS29. Only provisions which are liabilities are covered where? In AS29. But we all know that now provision for doubtful debt is not a liability. Correct? Yes. So first let us discuss the contingencies part. So what do you mean by contingencies? Contingencies are any condition or situation, the outcome of which is not known. The ultimate outcome is not known, which can be either gain or loss, and will be known or determined only on the occurrence or non-occurrence of uncertain future event. Only by the occurrence or non-occurrence of one or more uncertain future event. This means contingencies. Correct. Now, accounting treatment of contingent losses means that contingencies give rise to losses. Correct. So it means if it is likely that a contingencies will result in loss to the entity, then it is prudent to provide such losses. Means we will create a provision for that, provisions for such contingency losses. Correct. It is likely. Likely means what? It is probable. Likely means it is probable. Means chances are more than 50%. More than 50%. And it is not 90%. 90% become what? More than 95% become virtual certainty. Correct now. So it is probable, means chances are more than 50%. Accounting treatment of contingent gain. So normally we don't recognize contingent gain. So if there is any contingent gain, ignore it and will not recognize any contingent gain. However, when the realization of gain is virtually certain, when the realization of gain is virtually certain means chances are more than 95%, then such gain is not a contingency and accounting for the gain is appropriate. Then we should recognize such contingent gain in our books of account. In our books of account means we recognize any receivable, correct. However, one note already I have said that AS4 that deal with contingencies are applicable only to the extent not covered by other accounting standards. Means now after introduction of AS29, most of the contingencies are covered in AS29. So that is now not covered in AS4. For example, the impairment of receivable. Impairment of receivable is nothing but provision for doubtful debt. Correct now. Commonly known as provision for bad and doubtful debt is governed by AS4. So whenever questions come for provision for doubtful debt, you need to answer from the point of view of AS4. Very simple. So any contingent loss should be recognized, should be provided for. Chalega. So in this chapter mainly we discuss about event occurring after balance sheet date. Event occurring after balance sheet date. So what do you mean by event occurring after balance sheet date? So any event which are significant event, which may be favorable or unfavorable, means which may result in gain or loss. So which are significant event which may be favorable or unfavorable and which occur between the balance sheet date and the date on which financial statement are approved. So financial statement are approved by whom? By board of directors, not by shareholders. It is approved by board of directors. So normally can I say after balance sheet date there will be one directors meeting. In directors meeting they will approve the financial statement of what? Related financial year. Yes or no? Correct. So financial statement are approved by the board of directors in case of companies. Of course, in case of company, board of directors will come. In case of any other entity, by any other appropriate governing body, by any other appropriate governing body. So by the corresponding approving authority in case of any other entity. Chalega. Means simple word, I will say whenever there is a question of what? AS4 related to event occurring after balance sheet date. So this will be reporting date and this will be what? Date of approval. Means any event which occur after the date of approval is not covered in this chapter. Any event which already occurred before reporting date is also not covered in this chapter. Means we are only discussing about those events which happen subsequent to reporting date but before approval of financial statement. So we are dealing with this event. Now this event can be of two types from this chapter point of view. One is adjusting event, one is non-adjusting event. So adjusting event are those events which provide further evidence of the condition existing on balance sheet date. So any event which relate to the condition existing on the balance sheet date is known as what? Adjusting event. So that need to be adjusted in the financial statement for which we are preparing our financial statement. Means for which we are approving the financial statement. So for this financial statement we are discussing about. So such event will be adjusted in the financial statement. When we say adjusted means what? We should recognize corresponding income and corresponding expense and we need to adjust the related asset and related liability. Understood? Means they can be either increase in asset or decrease in asset. So increase in asset account debit to income or reduction in expense, whatever. Correct now. Are you able to understand? So we need to pass corresponding adjustment entry on balance sheet date only. Can you say any error which is identified after reporting date but before approval of financial statement? Any event which is identified after balance sheet date and before approval of financial statement will be adjusting event, need to be adjusted, and that we do adjustment. But there are some error which are identified after approval of financial statement. There are some error which are identified after approval of financial statement. Quite possible, means we are discussing about error of this year which is identified after approval of financial statement. Whether it can be adjusted? No, because that is not related to this chapter. Yes, that will become an error, and that will be covered in AS5. That will become an error, and that will be covered in AS5. Means we are right now only discussing about those events which are identified after reporting date but before approval of financial statement. Correct? Understood this point? What are non-adjusting event? Non-adjusting event are those events which do not relate to any condition existing on balance date. It means that is related to the condition which arises, that relate to any condition which arises after balance date. After balance date, therefore it becomes non-adjusting event. Such event does not require any adjustment in the financial statement. Only a disclosure is required if the amount is material. If the amount is material, disclosure is given where? In the report of approving authority. Means in case of company it will be director's report. In case of company it will be director's report. Simple. Simple. The most common example is related to debtor. Most common example is related to debtor. For example, this is the reporting date and there was a doubtful debtor. There was a doubtful debtor and this debtor become insolvent. Insolvent after reporting date but before approval of financial statement. But the adjusting, non-adjusting, it become an adjusting event because there was a condition existing on balance date that he was a nalayak doubtful debtor. Correct? But suppose there was a debtor and he was a good debtor only, but some fire occurred in his premises and because of that fire he become insolvent. For the adjusting, non-adjusting. So similar type of example. In both cases, the debtor become insolvent after reporting date, but one will be adjusting, other will be non-adjusting, depending upon the condition existing or not existing on balance sheet date. I hope you have understood. We have taken many examples in class, so all the examples we are not taking because this is a revision class. Understood now? I hope you have understood this point. This is the most common example I have taken. So you have understood event, adjusting event, non-adjusting event. So some of the examples of adjusting event. I am just reading it so that it will become a revision. Normally they ask question of this nature only. First is what the settlement of court case after reporting date. If any court case is settled after reporting date, so it will be providing some evidence of the condition existing on the balance date. Means on reporting date you have created a provision for legal damages. On reporting date you have already created a provision for legal damages as per AS 29 1 lakh rupees. But now the court case is settled and the amount payable decided by the honorable court is 1,20,000. So but it become adjusting, non-adjusting, adjusting. So you should increase your provision by 20,000. And suppose you win the cases and now no compensation payable, adjusting, non-adjusting, adjusting. So you should decrease your entire provision and amount of provision now will become nil. Understood? Understood. The bankruptcy of a customer that occur after reporting period. I have taken example right now. Then the sale of inventory after reporting period. Sale of inventory after reporting period. Provide an evidence of NRV. Provide an evidence of NRV. NRV means what? Estimated selling price minus estimated selling expense. So it was an estimation. So suppose you have calculated, you have estimated NRV at ₹100. But actual sale happened after reporting date before approval of financial statement. As per that, NRV should be 80. So it will provide evidence of the condition existing on the balance sheet. Therefore, it become a adjusting event. Understood? Understood? Means for just try to understand. I'll give you two examples for inventory. So suppose you estimated NRV 80. Correct? Now actual sale occur. Actual sale occur. Now based on this sale, NRV is what? 70. But the adjusting, non-adjusting, adjusting. Correct? Now similar example, NRV was 80. NRV was 80. Correct now. And a fire occurred after what? Balance sheet date. Because of that reason the inventory destroyed and now NRV becomes 70. Now NRV becomes 70. But the adjusting, non-adjusting. So this is non-adjusting because it relate to condition arising after balance sheet date. This relate to condition arising after balance sheet date. These are two different examples. Two different examples. Have you understood? Yes sir, we have understood. Now next point is what? The determination after reporting period of the amount of profit sharing bonus So can the profit is known only on approval of financial statement, and based on that profit bonus might be payable. So that bonus also become a adjusting event. Correct. The discovery of fraud or error that show the financial statement are incorrect. Already I have said any error which has been identified after reporting date but before approval of financial statement will be always adjusting event. Examples of non-adjusting event, this become more important because normally students are confused about what non-adjusting event means. Any example of non-adjusting event, students are more confused, it is adjusting or non-adjusting. So simple, which relate to condition, but that condition arises after balance sheet date. For example, any changes in the market value of investment. So any subsequent changes in the market price of investment, it relates to condition after balance sheet date, therefore non-adjusting event. Major business combination. Business combination means amalgamation. You have done amalgamation after balance sheet date. So of course it is what? Non-adjusting event. Major purchase of asset. You purchase the asset after balance sheet date. Non-adjusting event. Classification of non-current asset as held for sale after reporting date. Means any asset which is retired from active use and held for disposal after balance sheet date. So of course it is after balance sheet date, it condition arises after balance sheet date, it become a non-adjusting event. Changes in foreign exchange rate. Any changes in the exchange rate in foreign currency is what? Subsequent. It is subsequent evidence. Correct now. Relate to the condition after balance sheet date. Major litigation after reporting date. Any litigation which arises, not settlement, any litigation arises after balance sheet date has nothing to do with the last year financial year. Therefore, it will be a non-adjusting event. Chalega? Yes, sir. Now there are two special cases from which question may be asked. One is going concern. Now you know going concern that we always prepare a financial statement based on going concern. Means entity should prepare their financial statement on going concern. But if entity become non-going concern, then the financial statement is prepared based on non-going concern. And it means we need to now recognize all assets and liability at realizable value. It means what AS4 says that entity shall not prepare financial statement as per going concern if they intend to liquidate, or if they intend to cease their trading, or they do not have any other option. Only one option is available, that is to liquidate. Correct. Has no realistic alternative but to liquidate. So if there is an intention to liquidate, or intention to cease trading, or there is no other option, only one option available, that is to liquidate, it means now the entity become non-going concern. And once the entity become non-going concern, the financial statements will be prepared based on non-going concern assumption. So what AS4 says that if after balance sheet date, before approval of financial statement, some event occur which indicate that entity become non-going concern, then financial statements will be redrafted based on what? Non-going concern. Even though there was no condition of liquidation on balance sheet date. So this become an exception to general rule. Means can I say in this way? Suppose a fire occurred. So there can be two situations. Either entity is still going concern, or it become non-going concern. If it is still non-going concern but adjusting non-adjusting, it is a non-adjusting event. So if it is a going concern, so any loss occurred that will not be recognized in this financial statement. It is a non-adjusting event. If the amount is material, that may be disclosed in the report of approving authority. But it become non-going concern. So even though there was no condition, it will be considered as adjusting event, and the entire financial statement of this year will be redrafted based on non-going concern. Non-going concern means all assets and liability will be recognized at realizable value. Yes or no? I hope you have understood. So if the going concern assumption is not valid, Based on the event occurring after balance date, the financial statement are prepared on a liquidation basis. Understood this point? Then next point is proposed dividend. So any dividend which has been declared, after balance date, but whether there is any obligation to pay, there is no obligation to pay. His obligation to pay will arise when it is declared on or before balance date. So if it is declared after balance date, AS4 says that it is not a liability, therefore such liability should not be recognized in the financial statement. So any proposed dividend which is not yet approved by the shareholders, any proposed dividend which is proposed by board of directors but not yet approved by shareholders, can you say there is no liability only, and therefore such proposed dividend will not be recognized as a liability. Simple word. Correct. So if dividend are declared after balance date but before the financial statement are approved, the dividends are not recognized as a liability at balance date because no obligation exists at the time unless a statute require otherwise. Of course, if the law required to recognize it, then to be recognized, because law cannot override AS cannot override a requirement of law. But no law requires that. So as per Companies Act also, Companies Act says that this will not be recognized. Understood? So unless a statute requires, so if any law required to recognize such a liability, then we need to recognize it. I hope you understand it. Thus, no liability for proposed dividend need to be recognized in the financial statement. Such dividend only require disclosure. In the notes to account. Chalega. Disclosure requirement to only we should disclose for non-existing event. If the amount is material, what are disclosure requirement? Nature of the event and an estimate of the amount of financial effect. And if the effect cannot be determinable, the fact need to be disclosed. AS4 completed. Simple. Recap हुआ? I think simple. We have revised only in what 10 to 50 minutes. So that you can also do. Means whenever you think that you have forgotten any accounting standard, just go to AS book, AS content, just read all the point, everything will come in your mind. So this requires a continuous revision. So I have already said in my class also that all AS need to be revised on a daily basis. Before sleep, just revise 15 to 20 minutes, one AS. If you do that now, the content will be in your mind. And if the content is in your mind, you can react in exam hall. But if you have forgotten the content, how can you write? Understood? Can we come to AS29? Come to AS29. Means after AS4 I am doing AS29 because it is also related to contingencies. Chalega? Okay, sir. Now AS29 deals with provision, contingent liability and contingent assets. Chalega? So what do you mean by provision? Provision is a liability. So provisions are liability. Means can I say provisions are liability, but all liabilities are not provision. So which liabilities are not provision? Which require estimation. Any liability which require estimation become what? Provision. So any liability which do not require estimation is not a provision. Any liability which do not require estimation is not a provision. And so this is the difference between provision and liability. So provisions are liability which can be measured only by using a substantial degree of estimation. So any liability which require estimation become provision. Can I say when I am saying estimation which can be measured, so we need to measure either amount or timing. Either amount require measurement or timing of payment require measurement, means we don't know when to pay. So we need to estimate the date of payment. Based on that also provision require estimation. Yes or no? So either amount is required to be estimated or timing is required to be estimated. Means we know the amount but we don't know when to pay. We know the amount but we don't know when to pay. Then also it become a provision. So which can be measured only by using a substantial degree of estimation. Now the question is that what is a liability? So liability means what? Present obligation arising from past event. The settle which will be settled through outflow of resource. So any present obligation arising from past event which will be settled through outflow of resource is a liability. Which will be settled through outflow of resource is a liability. Understood? Simple. Correct. Means can I say in this way all obligations are not liability? Only present obligation arising from past event are liability. So there may be some other obligations which are not liability. So liability means present obligation. Present obligation means obligations are probable on balance sheet date. Obligations are probable. Probable means chances are more than 50%. So any obligation is present obligation if based on the available evidence its existence at the balance sheet date is considered probable, that is more likely than not, means chances of occurrence is more than chances of non-occurrence, means chances are more than 50%. Understood? So liability means present obligation arising from past event which will be settled through outflow of resource. Resource means what? Asset. Resource means outflow of asset. So provisions are liability of uncertain amount. Correct? And if that amount require measurement, it become a liability, a provision. Understood? Yes, sir. This much means can I say if three conditions are satisfied? If how many conditions are satisfied? If three conditions are satisfied. Correct. If three conditions satisfied, then we should recognize a provision. We should recognize a provision means we should pass a journal entry for that. We need to pass a journal entry for that. What are three conditions? First condition, there must be present obligation arising from past event. There must be present obligation arising from past event. Second, outflow of resource which is required to settle the obligation must be probable. Must be probable. Probable means once again chances are more than 50%, and a reliable estimation can be made for the amount of obligation. Understood? Correct. I think this point number one and point number two, when I am saying there must be present obligation arising from past event, so present obligation means obligations are probable. Means in the first condition, the point is obligation must be probable. In second condition, outflow must be probable. So both are probable. So obligation is probable and outflow is probable. These are two conditions. Obligation means chances of occurrence of that event is probable. So when I am saying obligation is probable means chances of occurrence of that event is probable. Once the event is probable, the chances of occurrence probable, then you need to find out whether you can avoid payment. If you can avoid payment, then there is no provision or there is no liability. But if the payment cannot be avoided, means the outflow is also probable, then you should recognize the provision. Means can I say outflow must be also probable? But if the outflow can be avoided, if the outflow of resource can be avoided, then no provision is recognized. Then it required disclosure as contingent liability. Then it required disclosure as contingent liability. So both are, there are two separate conditions. First is what? Obligation must be probable, means there must be present obligation. Present obligation means obligation must be probable on balance sheet date. Obligation must be probable means chances of occurrence is more than 50%. Then once the first condition satisfied, go to second condition. Second condition deals with outflow. Outflow must be also probable. Then if outflow is probable, can you estimate that amount of outflow? If yes, then recognize provision. From examination point of view, if the first two conditions are satisfied and question is silent about amount, always assume amount can be estimated. Means if question is silent about the estimation of amount, or always assume amount can be estimated. Means don't assume that amount cannot be estimated, because we can estimate anything. Chalega? Understood what I am saying? So from exam point of view, saying if question is silent, always assume amount can be estimated. Understood this point? Means can I say in this way, any obligation which is dependent on future conduct of business, any obligation which is dependent on future conduct of business should not be recognized as provision. Yes or no? Because if it is dependent on future conduct of business, means it can be avoided. It can be avoided. A best example which I will say is, suppose there was some amendment in the act, amendment in Companies Act or income tax or GST, whatever. Because of that reason, we require training of employee. We require training of employee. So whether for that training expenses which will occur in future, we should create a provision. Can I say it can be avoided? Because it depend upon future conduct of business. Whether training will be given or will not be given, that depend upon future conduct of business. Now it is quite possible instead of training we may recruit some trained employee only. So in that case, that training expenses can be avoided. In that case, the training expense can be avoided. It means it is based on, it is dependent on future conduct of business. Therefore, no provision is required. Means we should recognize only provision for those obligations which exist independently from the future conduct of business. Means whatever business will perform, we need to pay. Means it cannot be avoided, it cannot be avoided. Then we should create what? Provision. Understood. So only those obligations which exist independently from the entity's future conduct of business should be recognized. Got this point? Correct. Now this last point is very simple. All obligations involve other party. However, for recognition of provision, identification of other party is not at all essential. Means even though you don't know the identification of the other party, you don't know the name, address, whatever of other party, then also you should recognize the amount of provision. Chalega? Yes, sir. Then what do you mean by contingent liability? The contingent liability means our present obligation. So the contingent liability are any present obligation which arises from past event but which cannot be recognized as provision because either outflow of resource was not probable or reliable estimation of the amount can't be made. Correct. Means there was a present obligation from past event which cannot be recognized because outflow of resource to settle the obligation is not probable or reliable estimation cannot be made or any possible obligation arising from past event, any possible obligation. So what do you mean by present obligation? Present obligation means chances are more than 50%. So possible obligation means chances are less than 50% but more than 5%. Means it is not more than, it is not more than more likely than not. Means it is not probable. So can I say present obligation means probable and possible obligation means not probable. Not probable. Understood? Correct. Understood? That is only given. An obligation is a possible obligation if based on the available evidence the existence at the balance sheet date is considered not probable. That is not high. That is not more likely than not. So now we all know that contingent liability does not require any recognition. It requires only disclosure. It requires only disclosure in notes to account, in notes to financial statement. Correct. It requires only disclosure in financial statement. In financial statement means in notes to account unless outflow of resource is remote. Means if the outflow of resource is remote, then ignore it due to matter ready concept. Chalega? Yes, sir. The summary has been given by me to understand from examination point of view whether we recognize provision or contingent liability. Correct? So can you means whenever questions come, always think about obligation, outflow of resource, estimation. If all these three conditions satisfied provision, if any one of these three conditions is not satisfied, then either contingent liability or no treatment. Okay? So if there is a present obligation, outflow resource probable, estimation can be made. Then what? Provision. If there is a present obligation, not probable, amount can be estimated or cannot be estimated. This is not relevant now. Means can is a contingent liability require disclosure even though amount cannot be estimated. Correct now. So for contingent liability, if amount can be estimated, balle balle. If amount cannot be estimated, super balle balle. Understood? Means in both cases what recognize? In both cases disclose what? Contingent liability. Understood this point? So this will be a contingent liability. Third case, present obligation, but the outflow of resource is remote, then no contingent liability, no treatment. Then no treatment. Whenever anything become remote, no treatment. Okay. Then possible obligation, probable amount may or may not be estimated. Then it is a contingent liability. Possible obligation not probable, not probable. Amount may or may not be estimated. This is also what contingent liability. But possible it become remote, then no treatment. And if the obligation is only remote, then no treatment. Understood? Correct? Yes, sir. Then what do you mean by contingent asset? Contingent asset, very simple definition. If the contingent asset means any possible asset arising from past event. Any possible asset arising from past event. Any possible asset arising from past event, the existence of which will be confirmed by occurrence or non-occurrence of uncertain future event which is not within the control of entity. This if you want to memorize, memorize. However, the keyword is what? Any possible asset arising from past event are contingent asset. Correct. Now, as per the accounting treatment is concerned, what AS 29 says that if inflow are virtually certain, then it is not a contingent asset. It is a asset. Recognize such asset in books of account. But if inflow is probable, then it is not an asset. It is a contingent asset. Do not recognize contingent asset. Only disclose in the report of approving authority. But if inflow are not probable, then no treatment. Means can I say AS 29 is more strict for inflow because of conservatism principle. Because of conservatism principle. So one summary I have given for outflow and inflow. Means if it is 100% certain, then liability asset. If it is more than 95%, then here is a liability and that liability is a provision because it requires estimation. But here we will call it asset. Means there is no substitute name given for the asset which require estimation. Means यहाँ पर substitute name has been given provision ना, but here no substitute name has been given. Asset is asset. Understood? If it is more than 50% but less than 95%, then here it is what? Here it is provision. Here it is contingent liability. Contingent asset. Sorry. Contingent asset. Correct? Here it is provision. It is a contingent asset. Here it is less than 50%. Then it is contingent liability and no treatment. If it is remote, less than 5%, no treatment, no treatment. Chalega? Yes, sir. Now let us come to the measurement of provision from examination point of view. Measurement. Whenever they ask a question of measurement, so measurement will be done based on best estimate. As per the best estimate of future expenditure, which is required to be settled as on what? Reporting date. So it is nothing but best estimate of the expenditure required to be settled the present obligation at balance sheet date. Understood? But understood this point? But how to measure this best estimate? That depends upon the probability of what possible outcome. So in exam they will give you what? In exam they will give you possible outcome. You need to only calculate weighted average of all possible outcome. So determine the expected value of obligation. Expected value of obligation means weighted average of all possible outcome. For example, suppose they have given that entity has done a sale with warranty. Correct? So can I say there is a present obligation for warranty obligation. Correct? Now as per the past experience, suppose the total units sold is 10,000 units. Now as per the past experience, management knows that 20% customer will have some major defect. correct? 40% of customer will have minor defect and 40% of customer will have no defect, correct? And as per their past experience, they know that if the major defect will come, it will be around 1000 rupees amount of outflow. If minor defect, it can be 600 rupees, and this will be nil. So what will be the expected value of obligation? Means what will be the amount of provision? So amount of provision will be based on this possible outcome. So we'll calculate weighted average of all possible outcome. So first measure 20% of 10,000 into what? 1000. Then 40% of 10,000 into what? 600. Then 40% of what? 10,000 into what? Nil. This total will be the expected value of obligation, which will be the amount of provision, correct? And this amount of provision will be recognized at undiscounted amount. Undiscounted amount. At undiscounted amount. Understood? Have you understood this point? Correct. However, there is only one exception to this undiscounted amount, that is DRSL. Already we have done that point in AS10. So AS10, because there was a revision in AS10, so AS21, 29 was also revised to that extent. However, AS29 says that all the provision will be recognized at undiscounted amount. Only one exception is there, that is DRSL. If there is a DRSL, then that amount of provision will be a discounted amount. Discounted amount. So only one exception is there. Understood? So the undiscounted amount, only one exception. Exception is what? DRSL. DRSL means what? Decommissioning, restoration and similar liability. As per AS10, na, this will be a discounted amount. Understood? Have you understood this point? Correct. So they have given provisions should be measured before tax. Before tax means it should not be recognized as net of tax. It should be always before tax. The amount of provision should not be discounted to its present value. Exception. In case of decommissioning, restoration, similar liability that are recognized as a cost of PP, amount of provision should be discounted to its present value. Should be discounted to its present value. Correct? Should be discounted to its present value. And the discount rate should be what? Pre-tax. Understood? So this much is only relevant from what? Measurement of provision point of view. Have you understood this much? Have you understood this much? Normally it has been seen that in CA Inter they do not ask measurement wala point, but in past examination they have asked. Means out of 10 times, 2 times I will say they have asked. 8 times they don't ask question from measurement. But if they ask, it is easy only. Chalega? Yes, sir. Then changes in provision. Changes in provision. So the amount of provision should be reviewed or reassessed at each balance sheet date. If any changes means increase or decrease, that changes should be done. And if the provision is no longer required, it should be reversed. If the provision is no longer required, to be reversed. It is quite possible present obligation now become possible obligation or remote obligation. The provision is no longer required, so we need to reverse the entire amount of provision. Correct. Use of provision. Can I say provision should be used only for the purpose it has been created. It should be used only for those of expenditure for which it was originally created. Means it cannot be used for any other purpose. It cannot be used for any other purpose. If provision no longer required, it cannot be used for any other purpose. Reverse it. Reverse it. Understood? Correct? Yes, sir. Then there are 4 special cases. 4 special cases. First is reimbursement. Reimbursement. It is quite possible that expenditure which is required to settle any expenditure required to be settled may be reimbursed by third party. May be reimbursed by third party. For example, insurance company. So if it may be reimbursed by third party, should we create provision? Yes. Provision should be created based on that 3 conditions. The 3 conditions satisfy recognized provision. But now question arises, what about reimbursement? What about reimbursement? Can that reimbursement is a possible asset arising from past event? So if that reimbursement is virtually certain, then recognize a reimbursement asset. Recognize a separate reimbursement asset. Understood? So we should recognize a separate reimbursement asset and it should not be deducted from provision in balance sheet. Means provision will be separate, reimbursement asset will be separate in the balance sheet. However, in SOPL, net amount will be recognized as an expense. Means in SOPL, provision less reimbursement asset, that amount will be your expense in SOPL. But in balance sheet, we can't do set off. Understood? Correct. So if it is virtually certain, recognize reimbursement as a separate asset. Such amount is set off against provision and net amount is shown in PL. However, can I say amount of reimbursement asset should not exceed the amount of provision? Either it will be equal to or less than the amount of provision. So amount of recognized as reimbursement asset should not exceed the amount of provision. Understood? However, if the reimbursement is not virtually certain, so it can be either probable or not probable. If probable, then only disclose. If not probable, ignore. No accounting treatment. So not recognized as an asset. But you can say if it is probable, then disclose. If not probable, no treatment. Disclose where? In, I am writing director's report. Chalega? Director's report. In the report of approving authority. Simple. Reimbursement done. Then, what about future operating loss? Future operating loss. So can I say any future operating loss is based on future event? It is not based on past event. Therefore, can I say this AS is not applicable only? We should not create any provision, neither we should disclose that amount. So any future operating loss is based on future event, therefore not related to this chapter. Correct? So provision should not be recognized for any future operating losses. Now what about executory contract? What do you mean by executory contract? Means either both the party has not performed their part of obligation or both the party has partially performed their part of obligation, then that contract will become executory contract. Now can I say executory contract, so if can I say it is nothing but a future event because both the party will perform their part of obligation in future. So once again AS 29 is not applicable because that is based on future event. So AS 29 is not applicable to any executory contract. For example, right now we have done one contract. Once you pass CA inter exam, I will teach you CA final at this fees. I mean fees also we have decided. I mean in future the fees might increase now, but for you we have fixed the fees. See, once you pass the CA inter exam, of course you want then CA final classes. And I will teach you FR financial reporting. There is one subject financial reporting which I will teach. Marketing कर रहा हूँ, ठीक है? Understood? So I will teach you CA final FR. Are you able to understand what I am saying? So right now we have done one contract that I will teach you CA final FR. Once you pass CA enter, come to me only. Correct? At this fees also decided. So बताओ, it is a executive contract. It is not an executive contract. Executive contract because can I say I have not performed my part of obligation. You have not performed your part of obligation means you have also not paid any amount. Even though you might have paid some advance, but that is not a payment now. Because if I will not teach you, I need to refund that amount. Yes or no? So this become what? An executory contract. So because you are supposed to pay the amount, so whether AS 29 is applicable for you? No. No obligation. No obligation. But sometime what happens? Executory contract may become onerous. Onerous means burden. Onerous means burden. Now let me change the example. Suppose आपका example लेंगे. Correct ना? Let me suppose there is one student and he decided not to write CA inter exam. Correct? Not to write CA inter exam. आपका example नहीं रहता हूँ. You are not covered in this example. Suppose there was some student, he is not writing CA enter exam. But can I say any contract is what? Non-cancelable. When we have done one contract, that become non-cancelable contract. Non-cancelable contract are those contracts which can be cancelled upon payment of penalty. Because it was a binding contract. Now you are not writing CA enter exam. What can I do? So it means if you want to cancel the contract, you need to pay penalty. So now can I say for that student it become a burden? It become an onerous contract. Means without any benefit, he need to pay some penalty. So that become an onerous contract. I've just given a simple example to make you understand. Understood this point? I'll give you better example because this type of question can be asked. So what they are saying, an onerous contract is a contract in which unavoidable cost of meeting the obligation, under the contract exceed the economic benefit expected to be received under it. So cost is more than benefit, so it become an onerous. Then AS 29 is applicable. So AS 29 says that in this case amount of provision will be unavoidable cost, the cost which you can't avoid. That will be lower of cost of fulfilling the obligation, or any compensation or penalty arising from failure to fulfill it. So whatever compensation or penalty is payable in case you try to exit from the contract, that amount will come, whichever is lower. Understood? I'll give you the better example. I think in class I have given two examples. Both example I'll take because both example can be asked in exam. Suppose you have taken any asset on operating lease. Now do you know operating lease? Correct. Now operating lease means what? You need to pay rent, lease payment 10,000, 10,000, 10,000, 10,000 and 10,000. You have taken for 5 years. Understood? Can I say till now suppose you have used for 2 years. So can I say partially performed by both the party? So even the 2 year expired, for the balance 3 years, it is an executive contract or not? It is an executive contract. Correct. Now what happened? During 3rd year, you decided to change your production method, or decided to close down what? Your business, or decided to shift the location of production from this place to another place. Understood? It means now you will not use these premises for your business. Understood? But a contract was non-cancelable, which can be cancelled only upon payment of penalty. So can you say now it become a burden for this contract became a burden because you need to pay lease payment, but there is no benefit from these premises. So it become an onerous contract. Understood? It means can I say during this means whenever you have decided, correct now. So this 30,000 is what? Cost of meeting the obligation. You need to pay 10,000, 10,000, 10,000. So this becomes 30,000 means cost of meeting the obligation, or any penalty which will be payable on getting an exit from this contract, whichever is lower will be the amount of provision. Now you may think, sir, it can be subleased to other party. Yes, it can be subleased. Now suppose on sublease you are getting 10,000 into 3. So it means now your provision will be what? Sorry, my mistake. Suppose you are getting 10,000 for 3 years. Then 20,000 will be the amount of provision. Understood? Yes, sir. Correct? Yes. I think this example I have taken, and similar question is in ICAI study matter which can be asked in exam. Yes. The next point is restructuring. What do you mean by restructuring? Whenever there is changes in the scope of business, it is known as restructuring. For example, closing down one business, shifting from one location to another location. Correct? Or sale of any business, not entity I am saying. Sale of one of the business. Means when I am saying restructuring, It is a program which changes the scope of business without affecting what? Without affecting going concern. Means if it affect going concern, then so we are outside the scope of this chapter, na? So without affecting going concern, when I am saying sale of business, it is not sale of entity. One of the business sold, one of the business closed down, one of the location is closed down. Understood? This is known as restructuring. Now whenever we have decided for restructuring, suppose we have decided to close down a business, but it will take some time to actual close down. Suppose we have two factories, we have decided to close down the one factory. So immediately we can't close down now. It will take some time for closure. It might take 6 months, it might take 1 year, it might take 2 years or so. But whenever you will do actual closure, there will be some expenses incurred. For example, you need to pay compensation to the employee for that closing down. Yes or no? Which is not related to ongoing activities, which are incremental cost of closing down. Which are incremental costs, which will be incurred only because of closing down. Understood. Now the question is, should we create a provision of that restructuring cost today when you have decided? Well, yes, if you are committed to it. So if the entity is committed to restructuring, then create a provision for restructuring. Only this much you should know. Correct? So what they want to say, provision for restructuring cost is required when recognition criteria of provision are satisfied. No obligation arises for restructuring until the enterprise is committed to it. That is, there is a binding sale agreement. So commitment means suppose they have done a binding sale agreement with the third party. So it means there is a commitment. There is a commitment. Understood? Measurement of the provision. A restructuring provision should include only the direct expenditure arising from restructuring which are not associated with the ongoing activities of the entity. Means we need to create only provision for those expenditure which are related to restructuring, means which are not related to ongoing activities of the entity. For example, you are doing payment to employee for their services after closing down. So it is related to ongoing activities, so we will not create provision for salary. But if you are paying compensation to the employee because of what? Closing down, it relates to what? Restructuring. So we should create a provision for that. So they have given some example. If for this will not create any provision because these are related to, it is related to future conduct of business. For example, retraining or relocating continuing staff, retraining or relocating, marketing activities, or investment in new system and distribution network. So these are actually dependent on future conduct of business, and therefore no provision will be recognized for such amount. Yeah. Scope is very easy. AS29 is not applicable to following. It is not applicable to financial instrument. Financial instrument with debtor, etc. It is not applicable to executive contract except when they are onerous. It is not applicable to insurance entity from contract with policy holders. There is no accounting standard for that. It is also not covered to any other amount which is covered in some other areas. For example, construction contract. If you remember, in construction contract we have done provision for expected loss. That was covered in AS7. So that is not recognized as per AS29. Foreseeable future, if you remember. Foreseeable loss. Taxes on income. So of course taxes on income is covered in AS22. Leases are covered under AS19. Retirement benefit, entire provision for long-term post-employment benefit and the AS15 we have done, but that is based on AS15. Chalega. Disclosure you can read by your own. So this is AS29. Revision done. AS4 done. AS29 done. Come to one more AS. Now we'll take AS19. Now, Now AS19 is for lease. Now in this chapter we need to understand accounting treatment in the books of lessee or lessor. Correct. Can you see that is based on whether lease is a finance lease or operating lease. So we need to identify whether it is a finance lease or operating lease. Operating lease. If it is finance lease, correct, then what journal entry will do on inception of lease? Batao. It was leased asset account debit to lease liability, or you can say lease obligation also. Now this journal entry will be done at what amount? At lower of point number A, fair value of asset. Point number B, present value of minimum lease payment from the standpoint of lessee. Understood? Fair value will be given the question. MLP you need to calculate. Now MLP means what? MLP means what? It is present value of lease payment plus GRB in respect of lessee. Lease payment plus GRB in respect of lessee. Understood? Discount rate will be given the question. You can calculate present value. You are expert in that. Have you understood this point? Whichever is lower you will take. Whichever is lower. Done. Got this point? Correct. Then can I say second journal entry will be done for what? Payment of lease. Payment of lease payment. This lease payment will be paid. So first you need to recognize interest expense. So what journal entry will do? We'll call it finance charges. In this chapter we'll call it what? You can also say interest expense. Finance charges account debit to bank, or if you want to do two journal entry you can do that also. To lease liability. Better is to lease liability. First you recognize what? Finance charges. That will be applied on what? Opening lease liability. And then you will pay toward journal entry lease liability account debit to bank as per the contractual amount. As per the contractual amount. Then depreciation will be also charged. So depreciation account debit to what? Leased asset. Leased asset. Now this depreciation, if ownership is transferred at the end of lease term, then depreciation will be based on what? The depreciation will be based on lease term or useful life. Then depreciation is based on useful life, not based on lease term. Correct? But if ownership is not transferred at the end of lease term, then it is based on what? Useful life or lease term, whichever is lower. Whichever is lower. Understood? You want to write down? Hmm? LT means lease term. Useful life or lease term, whichever is lower. Everything is given in the book. I'm just summarizing. Chalega? Now, if it is operating lease, so can you say we need to calculate lease expense. Now, lease expense will be equal to total lease payment divided by what? Lease term. Means can I say on SLM basis? On SLM basis. So if there is an operating lease, what AS90 says that it will be recognized as lease expense over lease term on SLM basis. Unless there is some other appropriate method for recognition of such expense. So use any other appropriate method, if it is more appropriate. Use other method as per information given in question. Example production unit method. Example production unit method. Understood what I am saying? If nothing is given, then we'll use what? SLM. But if they have given some estimated number of units to be produced in during the lease term, then in that ratio will amortize the total lease payment. In that ratio will divide the total lease payment. Understood? Correct? Journal entry I hope you can do. Any difference between expense and payment will be adjusted in what? Lease equalization account, if you remember. Lease equalization account. Remember that account? For example, if total payment is 10,000, 20,000, 30,000 for 3 years. So that become what? Divide by 3 is equal to what? So what is your lease expense? So lease expense will be how much? 20,000. But how much is paid? Bank is equal to 10,000. So difference will be adjusted in which account? Lease equalization account 10,000. Understood? And second year, third year you will do the similar journal entry. Automatically the lease equalization account will be closed. Got this point? This is in the books of lessor. Now let us come to in the books of lessor. In the books of lessor. So in the books of lessor, it can be finance lease or operating lease. So operating lease will be similar, same thing. Only we'll write on lease expense will become lease income. Lease expense will become lease income. Lease expense will become lease income. So lease income will be recognized over the lease term on SLM basis unless there is some other method which is more appropriate. Now in case of finance lease, there can be 2 points. Either the lessor is a manufacturer or dealer. So manufacturer dealer, or it is non-manufacturer or dealer. Non-manufacturer dealer means he is a financer. He is a financer. Understood what I am saying? Are you able to understand? So can you see if he is a manufacturer dealer, it means the asset is an inventory. And if the asset is an inventory, so we should think about revenue now. So this will be a sale of inventory. Sale of inventory revenue. So in this case, what journal entry will do? Lease receivable account debit to sales. And then second journal entry will what? Cost of sales account debit to inventory. Cost of sales account debit to inventory. Understood this point? correct? But if he is financer, then can I say the asset is not inventory, it is as simple as any other asset. Then what's your entry? Lease receivable, account debit to what? Asset. Asset will come at carrying amount, and the difference will be gain or loss on sale, which will be transferred to PL. Only I need to explain you this amount, what amount this will be. This amount. Understood? So this amount is known as net investment. This amount is known as what? Net investment in lease. Net investment in lease. Understood? So can I say lease receivable will be recognized at net investment in lease? Net investment is what? That I need to explain. So net investment means what? Present value of gross investment. Present value of gross investment. Now I need to explain what do you mean by gross investment. Gross investment means what? MLP from the point of view of lesser plus UGRB plus UGRB. MLP from the point of lesser means what? Lease payment plus GRB, but in respect of what? Lesser plus UGRB. UGRB means what? Expected residual value minus GRB. This all will be given the question. I think थोड़ा थोड़ा याद आ रहा है. Only this much calculation is important from exam point of view. They will ask you to calculate net investment. So can you say once you can identify this amount, you can calculate because discount rate will be given. Present value you are expert now. Initially in advanced accounting classes, that time present value was for us difficult, but with FM the present value becomes what? What? Just like this, na? Correct? I know, because of course FM you are doing only what? Discounting. One chapter is there for discounting, na? Capital budgeting हो गया, चलो. But they have, I think any FM teacher will start with time value of money. Any teacher will start with time value of money. So one chapter was there for time value of money, and that I have done in my class in what? 10 to 15 minutes. Correct now. So now you become expert in discounting. So discounting you become expert. When you come to CA final now, once again started marketing. So once we come to CA final, the accounting is also become discounting. In all chapter will do discounting only. So in CA final, all the points will be based on discounting. So discounting is a very important concept for accounts also. Discounting is a very important concept for accounts also. Chalega? Yes, sir. I think this you have understood. So can you see lease payment, total lease payment. Lease payment means annual lease payment is given. GRB is given. UGRB you can calculate. You can find out net investment in lease. They also ask you to calculate sometime unearned finance income. Unearned finance income is what? Interest income. Interest income is what? Gross investment minus net investment. That is equal to unearned finance income. Unearned finance income. Only this much is relevant. Only this much is relevant from exam point of view. Understood? Correct? Chalega? Now let us come to the chapter. I have done the revision. Now let us come to the theoretical point of this chapter. So of course the scope, this accounting standard is applicable to all lease except lease agreement to use land. Means any lease of land is not covered in this chapter. Be careful. Lease of land is not covered. Understood? And lease agreement to explore or use any natural resources, that is also not covered. Means suppose you have a right to explore, extract coal from coal mines. That is also one type of lease agreement. That is not covered in this chapter. It is also not applicable to licensing agreement for items such as motion picture, films, video recording, plays, manuscripts, etc. For example, a cinema hall will get a right to run cinema. That is also one type of lease agreement, but that is not covered in this chapter. What is the meaning of lease? A lease is an agreement whereby the lessor conveys to the lessee in return for a payment or a series of payment the right to use an asset for a specified period. That is lease term. Classification of lease: it can be finance lease, operating lease. A finance lease is a lease that transfers substantially all the risk and reward incidental of ownership to the lessee. If all the risk and reward has been transferred, it becomes finance lease. Otherwise, it will be an operating lease. So, how will identify that risk and reward has been transferred? So, they have given how many situations? 5 situations: A, B, C, D, and E. This is important from exam point of view. Means they may give you case study, and you need to identify whether it is a finance lease or operating lease. So, first is what? Lessee will get the ownership of leased asset at the end of lease term. Second, lessee has an option to purchase the asset at the end of lease term at a price which is substantially lower than the fair value of asset at the date when the option becomes exercisable. Are you able to understand? So it has purchase option, but you can purchase only at a price which is lower than the fair value when you can exercise that purchase option. Then lease terms cover major part of the economic life of the asset. Major part of economic life of the asset. Now major part is not defined. From exam point will take 75%. Understood? The major part is not defined in AS 19. So lease term cover the major part of the economic life of the asset. Okay. This point number D. On inception lease, the present value minimum lease the present value minimum lease payment covers substantially the initial fair value of the asset. So present value of minimum lease payment. Now you know what is the meaning of minimum lease payment. Covers substantially the initial fair value of the leased asset. Means here also substantially has not been defined, but from exam point of view it will be 90%. This is important from exam point of view. The last, the leased asset is of specialized nature which can be used only by lessee unless major modification is being made. If any of these 5 indicators exist, it is a finance lease, otherwise it is a operating lease from examination point of view. Chalega? Yes sir. This you can read. Okay. Now lease payment means what? Lease payment comprises of minimum payment payable over the lease term. It will also include purchase option price. Purchase option price means lease payment means what? Annual lease payment plus purchase option price. Means can I say in this way? If there is a purchase option price, there will be no GRV, and if there is GRV, there will be no purchase option price. Because if there is a purchase option, then so lessee will never give guarantee na. Then so already they can purchase the asset at the end of lease term. So if there is a purchase option price, so there will be no GRV. If there is GRV, there will be no purchase option price. Understood this point? However, this lease payment will not include this three. So lease payment will not include this three. This will not include any contingent rent. Any contingent rent means the rent which is based on the happening or non-happening of uncertain future event, which is based on the some outcome, future outcome. For example, which is based on sales target, etc. So that is known as contingent rent. So contingent rent will not be included in lease payment. It will also not include any cost of services or taxes to be paid or reimbursed by lessee. So these payments are outside the definition of lease payment. So will be charged to PL as an expense as and when they are incurred. So this will not be included in lease payment. This will be charged to PL as an expense as and when they are incurred. Chalega? Yes or no? Correct. Now what do you mean by minimum lease payment? Already we have done. Minimum lease payment means what? Lessee. From lessee point of view, it will be lease payment over lease term. Now when we say lease payment means what? Annual lease payment plus purchase option price, if any, plus GRV in respect of lessee. GRV in respect of lessee means residual value guaranteed by lessee or on behalf of lessee. Correct. Lesser means from the point lesser, it is lease payment over the lease term plus GRV in respect of lesser. GRV in respect of lesser means residual value guaranteed by lessee or on behalf of lessee or by any third party, whichever is higher. But from exam point of view, question is silent. This GRV and this GRV will be same. So whenever till now they have not given any question where GRV are different. So if they have given only GRV, so that means GRV in respect to lessee and GRV in respect to lessor are same. Got this point? Yes, sir. Then accounting, this so I have done, I have already explained, you can read it by your own. ठीक है ना? Lesser accounting, this also I have explained, you can read it by your own. Operating, this also I have explained, this you can read by your own. Come to sale and leaseback transaction. Sale and leaseback transaction. So sale and leaseback transaction, you remember, whenever sale has been done, then the same asset has been leased back. Means the seller will become lessee and buyer will become lessor. So when I am saying sale and leaseback, there are two transactions, sale and leaseback. Now this leaseback can be either finance lease or operating lease. I mean right now we are not discussing about finance lease and operating lease. That will be accounted as we have done in AS 19. Only right now we are discussing about the gain or loss on sale. Means gain or loss on sale will be accounted in what manner? Means now gain or loss on sale will not be accounted as per AS 10. Will be accounted as per AS 19. Whenever there is a sale and leaseback transaction. That will depend upon nature of lease. Whether it is a finance lease or operating lease. I hope you are understanding. One second. We are right now doing sale and leaseback. So there are two transactions. Sale of asset, then leaseback. Leaseback can be either finance lease or operating lease. The accounting treatment of finance lease or operating lease will be done as what we have done right now. Only in this topic we are discussing about the accounting treatment for gain or loss on sale. The accounting treatment of gain or loss on sale will be based on the nature of lease. So if it is a finance lease, what AS 19 says that such gain or loss on sale of asset will be deferred. Means will not be recognized immediately to PL. Will be deferred, and such deferred gain or deferred loss will be amortized to PL over the useful life of asset in the ratio of depreciation. Have you understood? Correct. So what they are saying? If the lease back is a finance lease, any gain or loss on sale, there is sale price minus carrying amount, should not be immediately recognized in financial statement of seller or lessee. It should be deferred and amortized over lease term in the proportion of depreciation to depreciation of leased asset. Correct. Only this much you need to remember and write down in exam. Got this point? I think one question I have done, you can revise it by one. However, from exam point of view, this is more important. And leaseback is in operating lease. In this, there are three situations. If sale price is equal to fair value, if sale price is less than fair value, and if sale price is more than fair value. Can I say if I am saying sale price is equal to fair value, means it is at market terms, but these two are not at market terms. If sale price is equal to fair value, so market terms, so it means no adjustment required. So gain or loss will be recognized immediately in PL. So any gain, any loss, any profit or loss arising out of sale transaction recognized immediately in PL, because this is normal sale transaction, because you have done sale at fair value. But if sale is below fair value, so sale is below fair means sale price is equal to 100 and fair value is equal to 120. Correct. In this case, what will do? So in simple word, if I will say, if there is a profit, recognize it immediately. If there is a profit means what? You are comparing carrying amount with sale price. If there is a profit, correct? So sale price minus carrying amount will be recognized immediately. But if there is a loss, means suppose carrying amount is equal to 150. Understood? So there is a loss. Are you getting what I am saying? So you can see there is a loss. So what they are saying, if there is a loss, it should not be recognized immediately, provided the loss is not compensated by future lease payment. Correct. तो याद आ रहा है? Or I'll give in writing. You remember this all point? Means I have said one story that time so detailed discussion we have done. Correct. Means there can be two situations. This just try to understand. I'll just give you thoda sa concept so that you can remember what we have done. When sale price is less than fair value, it means what? It means what? Suppose I am in need of money. I am in need of money, so I will approach you. Now I have an asset worth rupees 120 lakh, but I need only what? 1 lakh. Quite possible. So in that case, what I will say, I am in need of only 1 lakh. Give me rupees 1 lakh. But in future, I will pay you lease payment, which will be lower than market lease payment or higher than market lease payment. Lower, because I have received lower amount, so I will pay you lower amount only. Means in that case, can I say the loss whatever is incurred right now, that will be compensated by future lease payment, that is compensated by lower lease payment, that is compensated by lower lease payment. Understood? So what they are saying, if there is a loss, correct, it should be recognized immediately provided loss is not compensated by future lease payment. Means if loss is not compensated by future lease payment, means genuine transaction. Genuine transaction means entire loss to be recognized immediately. But if loss is compensated by future lease payment, means that loss should be deferred, and the deferred loss should be recognized over the lease term in the ratio of what? Lease payment. In the ratio of lease payment. Understood? So in this case, if the loss is compensated by future payment, it should be deferred and amortized in the proportion to the lease payment over which the asset is expected to be used. Have you understood this point? But in case of profit, any profit will be recognized immediately. Will be recognized immediately. Understood? Correct. Thoda sa you need to memorize and go. If question is silent about these two cases, so I will suggest you write down both cases. If loss is compensated, then this is the answer. If loss is not compensated, then this is the answer. Got this point? Correct. However, sale price is above fair value. Now sale price is above fair value means you receive higher consideration. Higher consideration, so of course can I say it will be also compensated by higher future lease payment. In that case, any deferred gain means the gain will be considered as what? Deferred gain. Gain will be considered deferred gain, and that gain should be deferred and recognized on a systematic basis over the lease term in the ratio of lease payment. So excess of fair value should be deferred and amortized over the period for which the asset is expected to be used. Correct. Understood? Have you understood this point? Means just try to understand. If I am saying this case, so sale price is equal to 100, fair value is equal to 90, sale price is equal to 100, fair value is equal to 90, and carrying amount is equal to 70. Okay. Means you can see total gain is equal to what? Out of this deferred gain will be what? Very good. This is deferred gain. And what is the actual gain? This is the genuine gain now. So actual gain of rupees 20. This will be recognized immediately in PL. Only will deferred what? This. So any excess over and above fair value will be what? Deferred gain. Any excess over and above fair value will be deferred gain. Correct. Similarly, if I am saying sale price is equal to 100 and fair value is equal to 120 and carrying amount loss कर लेते हैं, gain तो will not discuss. So loss will come if suppose carrying amount is 150. Correct. Understood? So in this case, can I say actual loss is how much? Total loss is 50. Understood? Correct. And can I say this loss will become what? Deferred loss is what? 20, and the loss which will be transferred to PL immediately will be how much? 30. Means you will compare these two what? For finding out the loss which will be transferred to PL. So this will become deferred loss. And if the loss is compensated by future lease payment, then this will become deferred loss. Otherwise, this will be also transferred to PL immediately. So, thoda sa I will say practice karna this point, whatever I have done in the class. Otherwise, you will forget. Correct now. Means one time revision required to write correct point in exam. Correct point in exam, because this question will come to five sub point they will ask. Only to answer how much will be deferred, how much will not be deferred. So 5.5 marks easily you can get. Chalega. With this AS19 is also covered from examination point of view. Chalega. Interest calculation for this topic. चलो एक example लेते हैं. Example ले. The implicit rate, calculation of implicit rate of interest. Now so you have done internal rate of return, na? Not it done. IRR you have done in FM. So I said when I have done in the class, I said the better understanding of that point will come when you do IRR concept in FM. So I have done only the calculation part. I have not done the explanation part in the class because I don't want to waste much energy in that topic. So once your IRR topic will be over, you become expert in that. Then come to that point, you revise, you will get understood. You will understand everything. Abhi chhodna. Understood na? But that particular question is important from accounting point of view also. So right now I am not revising that intentionally because I know that point will be automatically explained where by your FM teacher. Until now you have not done IRR, so I think within 2 or 5 days it will be completed and it will be done. Then after that, if we are meeting again, you can ask me. Now that is based on the information given in the question. Means a question was given where the fair value of the asset was given 8 lakh. And they have given, in that question they have given 3 annual lease payment. But the amount is not given. Annual lease payment amount was not given in that question. I say this question is very important from exam point of view. And they have given UGRB 50,000. Understood? And they have given rate of interest, let us assume 10%. So in this case, first you need to find out nature of lease, whether it is a finance lease or operating lease. And lease term was given 3 years. 3 years, yeah, 3 years, huh? 3 years. So you need to first find out nature of lease, whether it is a finance or operating. I said always it will finance lease, but then also you need to prove it. But for that, what you want? Annual lease. So let us assume it is X. So X into what will do? Annuity factor, batao. 10% ka 3 year. It will be 2.91 na. 3 years. चलो 2 पॉइंट कितना आ रहा है 2 डेसिमल में दे दो 2.49 plus 50,000 because if nothing is given about GRB, so we'll assume GRB is 0. GRB is 0. Then 50,000 into what? Third year 0.75 will be equal to what? 8 lakh. So we can find out X. We can find out X. If we can find out X, then you will get annual lease payment. Then you can find out present value of total lease payment. Compare with what? 8 lakh. If it is coming more than 90%, it is a finance lease. Then in that question, they have also asked you to calculate unearned finance income. So unearned finance income is what? Gross investment minus net investment, that is equal to unearned finance income. I said that question was very important. Understood? Understood. So all the doubtful questions you ask me at the end of the chapter, means at the end of the revision I will say. Abhi I just concentrate on the content. Okay. Any more doubt in AS90? So I will say AS90 mean we have done 5 or 6 question only. That 5 or 6 question is important. Out of that question, 5, 6, 1 question they will ask. So don't go beyond that. Because I know they will not, ICAI will never go beyond that. So 5 to 6 question, can I say you can revise it, only it is based on calculation. Chalega? Yes sir. Done. Now let us come to which AS? AS20. Now coming to AS20, so we all know that AS20 is applicable to all the companies which are preparing their financial statement based on Schedule 3 requirement. Because Schedule 3 says disclose EPS on the face of SOPL. So EPS become mandatory. It is a statutory disclosure requirement. Statutory disclosure requirement. So how to calculate that EPS is given under AS20. So AS20 says that we need to calculate both basic and diluted earning per share that need to be disclosed on the face of SOPL. So how to calculate basic earning per share? So that is based on numerator and denominator. So numerator means what? Net profit and loss. Net profit and loss available or attributable to equity shareholders divided by weighted average number of equity shares outstanding during that period. So how to calculate numerator and denominator, that is a point of discussion. So numerator means what? Net profit. Net profit means as per SOPL. As per SOPL means as per AS5. So we'll take profit after tax as per SOPL. So when I am saying profit after tax, it will be after exceptional item, after extraordinary item, after prior period item, after tax. Understood? So simply it will be profit after tax as per SOPL. As per SOPL. So once you have taken profit after tax, but this profit is available to both preference shareholders and equity shareholders. But we are here to calculate profit available to equity shareholders. So we should deduct what? Preference dividend. Now preference dividend can be of two types. Either it is available to cumulative preference shareholders or non-cumulative preference shareholders. If non-cumulative, then deduct only when it is declared. But if it is to cumulative preference, or deduct whether it is declared or not declared. If question is silent, always assume cumulative preference shares. Always assume cumulative preference and deduct. And deduct it. Don't assume non-cumulative preferences by your own. Chalega. So this become profit available to equity shareholders. Okay, this profit part is very simple. Profit part is very simple. Correct? Understood. Now coming to weighted average number of auditing shares. Entire discussion will be based on weighted average. Understood? It means can I say we should take number of shares from the date when the consideration is received or receivable, consideration of equity shares received or receivable. Means the time weight is given. The time weight is given based on the number of days or number of months as the case may be. Correct? So in most cases, shares are included in the weighted average number of shares from the date the consideration is received or receivable, means receivable. For example, this is very important for theory question. Important. Understood? So if there is issue of equity share in cash, then included when the cash is receivable, not received. Receivable, not received. Correct. For issue of equity share on conversion of debenture, included from the date of conversion. From the date of conversion. Issued in exchange of liability, included from the date when the settlement become effective. Settlement become effective. Issued in lieu of interest, a principal on other financial instrument, included as of the date, means from the date when the interest ceases to accrue, means once the interest ceases to be accrued, means no interest will be charged. Issue of equity share for acquisition of asset included from the date when the asset has been recognized. So once the asset has been recognized, so from that date, the weighted average number of shares will be taken. Issue of equity share for rendering of services included from the date when the services are rendered, services are received. Issue for amalgamation included from the date of acquisition. Date of acquisition. This is important, Ratlina. Correct. Now coming to the weighted average number of shares, that depends upon the class of shares. Class of shares means whether it is a partly paid up shares or whether it is different class of share with different face value, or whether it is bonus shares or right shares. It depends upon that. Okay, now. So there are four important topics. First is partly paid up shares. So whenever there is a partly paid up shares, so we should convert partly paid up shares into equivalent number of fully paid up shares for the purpose of calculation of EPS. Remember that? So partly paid up share can be converted. For example, we have 10,000 shares of rupees 10 each, rupees 6 paid up. So how to convert? Divide by 10. So this will become how much? 6,000. So 10,000 into 6 is equal to 6,000 into 10. So we have converted partly paid up into what? Equivalent number of fully paid up shares. So for EPS calculation, we'll take 6,000 or 10,000? 6,000 from a date when the consideration is receivable. Correct? It means from a date of issue given in the question. Correct. Then different class of equity shares. Now suppose we have given different class of rupees 10, of rupees 20, of rupees 50. So different class of equity share with different face value. So we should convert all equity share into same class, either of rupees 10 or rupees 20 or rupees 50 as per your interest, whatever you want to do. So let us do conversion at rupees 10. So we can convert it and we can make it what? Equivalent number of fully paid up equity shares of rupees 10. That conversion is similar to what partly paid up equity shares. Correct? However, no question have been given of this nature in ICAI study material. So this is more important from exam point of view. But similar treatment will be done. Chalega. Then changes in the number of shares without changes in the value of capital, means we are discussing about bonus share. This is the important point. So in simple word, whenever there is a bonus shares, the date, the weighted average number of shares will be taken from the beginning of previous year, and previous year EPS will be also restated. Previous year EPS will be restated. Means the date of bonus year is not at all relevant. Date of bonus year is not at all relevant. Whatever bonus is issued during the year, for current year will take 12 by 12, and previous year EPS will be restated by taking 12 by 12. Chalega. Now coming to the right shares means any equity share which is issued at inadequate consideration. So whenever there is right shares, what AS20 says that it has two elements. One is paid element, one is bonus element. Paid element means number of shares which are issued at fair value. Bonus element means which are issued without any consideration. So we need to split right shares into two parts, paid element and bonus element. So number of shares which are deemed to be issued at fair value will be what? Number of right shares multiplied by right issue price divided by theoretical X right fair value of shares. Remember, theoretical X right fair value of shares. Theoretical X right fair value of shares, how to calculate? It is equal to pre-right fair value of shares plus right issue proceed divided by number of shares after right. Number of shares after right. So pre-right fair value of shares, of course in question they will give you pre-right fair value of shares also. So number of shares multiplied by pre-right fair value of each shares will become pre-right fair value of shares plus proceeds from right issue divided by total number of shares after right. That will become theoretical X right fair value of shares. Use this terminology in exam. Theoretical X right fair value of shares. So once you calculate this, then you can find out number of shares which are deemed to be issued at that price. So that will be equal to right issue proceed divided by theoretical X right fair value of shares. That will become number of shares at paid element. So total number of right shares minus what? Paid element will be bonus element. The weight of bonus element will be given for 12 by 12, means from the beginning of previous year. But the weight of paid element will be given from the date of right issue. Be careful. In this also previous year EPS will be restated to the extent of bonus years is considered. Chalega? Yes sir. I think done. Then we came to diluted earning per share. So diluted earning per share means what? Whenever there are potential equity shares in the capital structure of the company. So what do you mean by potential equity share which have potential to become equity share in future? Means any contract which may entitle the holder equity shares in future, that contract will become potential equity shares. For example, convertible debenture, convertible preference shares, ESOP or any warrant. So normally they will ask question about convertible debenture or ESOP. These two questions are important from examination point of view. Means either they will give you convertible debenture or they will give you ESOP. Normally they ask these two questions. Correct? Now, for the purpose of calculating diluted earning per share, we'll use this formula now. So it will be now adjusted net profit available to equity shareholder divided by adjusted weighted average number of equity shares outstanding during that period. So we should adjust the numerator and denominator with the effect of dilutive potential equity share. Correct. So what do you mean by dilutive and anti-dilutive potential equity share? Means when I am saying it will be adjusted with the effect of what? Means only dilutive potential equity shares should be considered. Any anti-dilutive potential equity shares should not be considered. That should be ignored for the purpose of calculation of diluted earning per share. Yaad aa raha hai? Correct. Now, when it will be known as dilutive potential equity shares? Whenever due to conversion of potential equity share into equity shares, if earning per share from continuing ordinary activities decreases, then it is known as dilutive potential equity shares. The benchmark profit is what? Profit or loss from continuing ordinary activities. Correct? So potential equity shares are dilutive if they are conversion into equity shares, reduces earning per share from continuing ordinary activities or increases loss per share from continuing ordinary activities. Potential equity shares are anti-dilutive when their conversion to equity share would increase earning per share from continuing ordinary activities or decrease loss per share from continuing ordinary activities. The effect of anti-dilutive potential equity shares are ignored. Understood? So what is the benchmark profit? What is the control factor? That is profit from continuing ordinary activities. So we have taken two questions to understand this particular point, if you remember. So let us do profit from continuing, loss from discontinuing, number of equity shares outstanding, number of potential equity shares. So what is the benchmark profit? 5 lakh. So first we'll do test for dilution. With a 5 lakh divided by 10,000, how much? 50. And 5 lakh divided by 12,000, how much? 41 point. So it is increasing or decreasing? Decreasing. So it becomes dilutive potential equity shares. So it means, can I say, to find out dilutive or anti-dilutive, whether you have taken total profit or profit from continuing operation. Profit from continuing operation. Understood? Now we'll calculate what? Basic and diluted earning per share. Basic and diluted earning per share. So what will be the basic? It will be 5 minus 15, means 10 lakh loss na. Divided by what? 10,000 is equal to 100. 100 negative na. And what will be dilutive? Diluted will be 10 lakh divided by what? 12,000 is equal to 81.33. Similar question I have taken where there is a loss from continuing operation and profit from discontinued operation. So now what is your benchmark profit? 15 lakh loss. So 15 lakh divided by what? 10,000 is equal to 150 and negative. And 15 lakh divided by what? 12,000. How much? 125 negative. So you can see loss per share decreases. So dilutive, anti-dilutive. Anti-dilutive. Therefore, potential equity share will be ignored. Therefore, basic and diluted both will be calculated by using only 10,000. Understood? This para. Okay. Then for option, there was one special point. I'll take one question to explain this. Suppose entity has issued a granted ESOP 1 lakh options at an exercise price of 20. However, the average fair value is equal to 50. Correct. But it is favorable, unfavorable. Means whether employee will exercise, employee will not exercise. Employee will exercise. Employee will exercise, na? Yes, sir. So in this case, what AS20 says that we need to find out dilutive component. So dilutive component will be number of shares which are deemed to be issued at nil consideration in future. Correct? So it will be 1 lakh into what? Into 20 divided by 50. How much? So this will be deemed to be issued at fair value. So how much will be deemed to be issued at nil consideration? 1 lakh minus 40,000 is equal to what? 60,000. So this will become dilutive component. This will become dilutive component. Or directly you can say 1 lakh into 20 divided by 1 lakh into 30 divided by 50. So you can find out difference. 50 minus 20. So 1 lakh into 30 divided by 50, 60,000 will come. That become dilutive component. Means in this case, the basic earning per share, let us assume the profit is 5 lakh. Understood? And ordinary shares initially was suppose 1 lakh. So it become 5 rupees. And diluted earning per share will be what? 5 lakh divided by 1 lakh plus 60,000. That is equal to 3.125. Understood? No restatement. Restatement is for bonus share. This is not bonus share. This is for future. The shares will be issued in future. So whenever shares are issued in future, ESOP option granted right now, shares will be issued in future. So that may dilute what? Earning per share. There is no restatement. Restatement is only for bonus element. Whether it is bonus shares or right shares. So only in 2 cases we will do restatement. Otherwise we will not do any restatement. Chalega. This much was the point from examination perspective. There is one issue number 7 that I have done in the class, but that is not so much important. If you want to revise, revise by rote. Means if you remember, I have done one question with what? 2 or more than potential equity shares. Correct. I said in the class that I am doing, but no question of that nature is given in ICAI study material. Correct. Understood. Only one point. Suppose they have given net profit 10 lakh, equity shares 1 lakh, and they have given convertible debenture 1 lakh into 10, rate of interest 12% will be converted in 1 lakh equity shares in future, and the tax rate is given 30%. What will be the earning per share? Basic. It will be 10 lakh divided by 1 lakh. This is the very simple. Now what will be the diluted earning per share? So it is 10 lakh plus interest will be added. So interest will be 10 lakh into 12%, but it will be net of tax into 70% now. Divide by what? 1 lakh. If nothing is given, we'll always assume the equity shares and debentures are outstanding from the beginning. So how many shares will be converted? 1 lakh. So 1 lakh into 12 by 12. This will become your diluted earning per share. Understood this net of tax? So can you say, in case of convertible debenture, numerator will be adjusted by interest net of tax. In case of convertible preference share, numerator will be adjusted by preference dividend but not net of tax. In case of ESOP, numerator will be adjusted with what? Nil. Nil. So ESOPs are not entitled to any income. Have you understood this point? With this AS20 is also covered. Chalega? Yes, sir. Correct. Now we'll take the AS17 also. AS17. So AS17 segment reporting. From exam point of view, two questions are important. Until they ask definition. Correct now. The definition they will not ask, but they can ask case study based question, means MCQ. Now, as per this chapter, there are two type of segment. Segment means what? Business segment or geographical segment. Business segment is based on product. Geographical segment is based on location. Correct. So business segment means what? Any component of entity that is engaged in providing individual product or services which is subject to risk and return that is different from other business segment. So one business segment will be different from other business segment based on their risk and return. Based on their risk and return. Similarly, geographical segment are the component of entity that is operating within a particular economic environment and that is subject to risk and return which is different from other component operating in different geographical locations. So one geographical segment and other geographical segment will be different from the point of risk and return in that particular geographical location. Correct? Yes, sir. So of course from exam point of view, so they will give you what are the business segment, what are the geographical segment. Now once you have identified business and geographical segment, you need to identify the reportable segment. Reportable segment. But to identify reportable segment, we need to first identify which one is which segment, business segment or geographical segment is primary or secondary. Why? Because for primary we require 7 disclosure. For secondary we require 3 disclosure. So any one of business or geographical segment can be primary, can be secondary, depending upon the information given in the question. Normally based on product will be what? Normally based on product will be what? Primary segment. But as per the knowledge, it will depend upon the dominant source of risk and return. If the dominant source of risk and return is product, then primary will be business, secondary will be geographical. If the dominant source of risk and return is geographical location, then primary will be geographical, secondary will be business. If nothing means if both are dominant source, then it can be what? Primary will be business and secondary will be geographical. But if you cannot identify that, it will be based on the management choice. Management choice. Then let us come to identification of reportable segment that will depend upon 4 criteria. Criteria 1, 2, 3, 4. 1 is based on QT. QT means quantitative threshold. So they have given 3 QT, 3 QT based on segment revenue, based on segment result, based on segment asset. So based on segment revenue means what? Segment revenue is 10% or more of total segment revenue. Now here segment revenue means direct sales plus inter-segment sales also. Correct. Now segment result means what? Segment result is 10% more of combined result of all segments in terms of profit, or combined result of all segments in terms of loss, whichever is greater in absolute amount. You remember this? First you do total of all profit, then you do total of all loss. Whichever is greater, that will become benchmark. On that you calculate percentage of all profit or loss. Anything which is more than 10% above will become reportable segment. Remember this? This is important, na? So they will ask only this in exam. I think we have done the question. Kar loge. Okay. So based on segment asset means what? Segment asset is 10% more of total segment asset. Got this point? Chalega. So this can see if all the information, normally direct information are given, only to calculate a percentage and find out which are reportable, which are non-reportable business segment based on QT. Based on QT. Second is based on management discretion. So based on management discretion, any segment can be added as a reportable segment even though it does not meet above QT criteria. Means any segment can be added as a reportable segment based on management discretion. Simple. Yeah, this information will not be relevant from exam point of view, and if they ask, they will need to inform that which they want to add. Then criteria 3 is based on previous year reportable segment. So what they want to say is any segment which are reportable during previous year based on QT criteria will be also reportable in current year even though it does not meet QT criteria, but based on QT criteria. Chalega? Last one is important from exam point of view, and this you need to apply even though question is silent. This you need to cross check even though question is silent. So what they want to say is the total external revenue reported by segment constitute less than 75% of total entities revenue. Total entities revenue means total external revenue. Correct. Then additional segments will be identified so that at least 75% of total entities revenue is included in reportable segment. So first you need to identify reportable segment, find out the external sale, compare with the total external sale. If it is less than 75%, you need to add additional segments such that that percentage become either equal to or more than 75% of total entities revenue. Chalega? Entities revenue means external sale. The word used is what? Entities revenue. Entities revenue means what? As per SOPL. As per SOPL means what? External. Chalega? Yes, sir. Now coming disclosure requirement. So they will give the question. We need to use that. Use the information given the question to fill this segment report. So I have just given one report based on the examination question. So first you need to identify primary and secondary. Primary normally in exam question will be based on product. Based on product means business segment. Secondary will be geographical segment, but it can be ulta also. Cross check your question. Normally they have not asked reverse wala question. So they will give some reportable segment, and any segment which are not reportable segment that will be consolidated for reconciliation purpose. So that will be known as all other reconciling segments. However, in exam till now they have not asked this point. They have given all segments and all segments are reportable. So we need to disclose how many information? 7 information. Segment revenue, segment result, segment asset, segment liability, and 3 other information: depreciation and amortization expenses, non-cash expenses, other non-cash expenses, and any capital expenditure incurred during the year. The 3 other information. With reconciliation. So first revenue, first we'll add on external revenue, then we'll add inter-segment revenue, then add any other operating income. This will become segment revenue. But segment revenue will not match with the total revenue in SOPL. Therefore we will minus what? Inter-segment sale. This will become what? Revenue as per SOPL. Reconciliation also done. Then result. So normally they will give segment result. If not given, so it becomes segment revenue minus segment expense. You will get segment result. But segment result need to be reconciled with profit after tax in SOPL. So there will be some reconciliation item. We'll deduct any interest expense which is not segment wise, means which is entity wise, less head office expenses, add any unallocated income, add or less any exceptional item. This will become profit before tax. From that, less tax expense which can be current tax, deferred tax, and then it will be profit after tax as per SOPL. Correct. Then asset will item first segment asset which can be non-current asset or current asset, as the case. This will be total segment asset. We'll add unallocated asset which can be investment, DTA or any other unallocated asset for reconciliation purpose. Then we'll do equity and liability. First we'll add on segment borrowing, segment current liability. This will become segment liability. In this we'll do add unallocated liability or deferred tax liability for reconciliation purpose. That will match with the total liability in balance sheet. Then we'll add equity, share capital, and reserve and surplus. So this will be total equity and liability, which will match with total assets. Okay. Then other three disclosure: capital expenditure, depreciation, amortization, and other non-cash expense. For this, no reconciliation required. So only reconciliation required for the first four disclosures. Then coming to secondary segment report, so which can be geographical of business, as the case may be. Normally it will be geographical only. So based on AS 73, more disclosure required for this secondary. One is what? External sale. External sale, not total, not including inter-segment sale, only external sale. Then segment asset, then segment capital expenditure. So only three: external sales, segment asset, segment capital expenditure, that require disclosure. You can do it. I think one or two questions has been given. Just do it. Done. AS 17 also done. We can take one more also. Correct, but choro, Aditya. So I think done. You have some question for doubt for this particular chapter? You have done revision? Not done. You have? So tomorrow we'll do, which AS write down? We'll do AS 5, AS 7, AS 9, AS 11, AS 18, AS 18, AS 25. Yes. How many years was 6 now? 6. Today also we can take one more if you want. Huh? AS 24 कर लें. AS 24 discontinuing operation. छोटा. AS 24 discontinuing operation. Now, discontinuing operation. Correct. Now, because we have done the Schedule 3 format, and as per the Schedule 3 format of SOPL, any profit or loss from discontinuing operation require separate disclosure. And because of that reason, we need to know what is the meaning of discontinuing operation. Because we need to identify which operations are discontinuing. Then only we can disclose the information. Now, from this chapter point of view, normally they will ask a question. Means one popular question is there, whether it is a discontinuing operation or it is not a discontinuing operation. So for that you need to understand the meaning of discontinuing operation. So discontinuing operation is a component of entity. Is a component of the entity that the enterprise is disposing. Pursuant to a single plan. Now first we need to understand what do you mean by disposing. Means how we can dispose of. So a clarification has been given that component entity can be disposed by any one of the following ways. Either it can be disposed, the component, by way of sale in its entirety. Means we can sell the entire group of assets and liability in its entirety. For example, this is a classroom. So this is one of the component of this building. So if you sell the entire classroom with all benches, all projector, all camera, all tube light, everything to a single person in a group sale, so it become what? Entirety. Understood? So disposing of component in its entirety means by selling the component in a single transaction, or disposing of the component in the piecemeal sale means selling one by one each individual asset and settling each individual liability. Means suppose one benches I have given to you, other benches I have given to some other person. So that is also disposing. So that is disposing of component piecemeal will be also covered. Correct. Last, terminating through abandonment. Terminating through abandonment means discarded it. Means this classroom we have closed it. Can you say we will close this classroom only at the end of economic life? Once the economic life is over and we don't want to sell it because there is no buyer only. So once the economic life is over, we will abandon it. Abandon with by way of termination. By way of termination. So any of these three will result in disposing of. Disposing of. So now let us come to one second that the enterprise is disposing pursuant to a single plan. Pursuant to a single plan that represent either a separate major line of business or geographical areas of operation. Means that component should be either business segment or geographical segment. Either business segment or geographical segment. Now we know which are business segment, which are geographical segment. Understood? And that can be distinguished operationally and for financial reporting purpose. Can I say if it is a business segment, so of course we know means that information is available separately for financial reporting purpose because we know the segment asset, segment liability, segment result, segment revenue. Correct now? So that can be distinguished operationally and for financial reporting purpose. If all these three conditions satisfied, then that component will be known as discontinuing operation. Discontinuing operation. So one second, can you repeat with me? Because this definition become important from exam point of view. So a discontinuing operation is a component of the entity that the entity is disposing of pursuant to a single plan that represent a separate major line of business or geographical areas of operation and that can be distinguished operationally or for financial reporting purpose. Now this para is very important. Following are not discontinuing operation. This is important. If they will give you a case study, in that they will ask whether it is a discontinuing operation. You answer no, because that will be covered in this point. Correct. So following are not a discontinuing operation. So it seems they are discontinuing, but they are not discontinuing operation. First, gradual phasing out of a product or a class of services. Gradual phasing out. See, normally what happens sometimes is suppose we are dealing with product A, but we are launching new product B because you know the technology will change in some time. So what you will do? You will reduce the production of product A and you will increase the production of product B. Na? This is known as gradual phasing out of the product. Gradually you are phasing out. Understood? Correct? Means for example, I will take my example. Initially I used to teach more foundation class. Then I understood I am a teacher of CA final. Foundation inter. So I need to stop teaching what? Foundation. But immediately I can't do na. Because I need to increase my final class. But no one knows in the market me about final class because I have not started with final class. So धीरे धीरे I increase उल्टा कर दिया. धीरे धीरे I will decrease my what? Foundation class, and as I gain popularity in what? Final. So I will increase my final class and one point will come when I will not take any foundation class. It happens with me. It happens with me. I started my career with what? Foundation inter, but now I only take what? Final. Means out of 8 batches in a year, 6 batches will be what? Final. 2 batches will be inter. No foundation batch. Understood? It means now I am known with what? Now you will ask me teach foundation. I am not capable of teaching foundation. Interest नहीं आता है. Understood now? Are you able to understand? If you ask me, if you give me money, I'll teach. ठीक है? The gradual phasing out of product line. I hope this exam, and this is only important. They will give a case study like this. You need to write down first definition, then write down keep falling are not discontinued operation. Then write down because it is gradual phasing out of the product, it is not a discontinuing operation. Second, discontinuing several products within the ongoing line of business. Ongoing line of business means suppose you are doing one operation, so you have some product. Out of that product, one product you have discontinued. It does not mean it is a discontinuing operation now. Correct? Within the online going of business, you have discontinued one product. It is not a discontinuing operation. Shifting of some production or marketing activities from one location to another. You have changed the location from one place to another area. It is not a discontinuing operation. Closing a production facility to achieve more productivity, improvement and other cost savings. For example, you have changed your old system, you have closed your old system and introduced a new system of production. Quite possible because increasing the productivity or improvement, etc. So you have closed your old factory and you have shifted to new factory. Yes or no? So this is only for increasing the productivity. It does not mean you want to discontinue. Chalega. So this is also not a discontinuing operation. Then selling a subsidiary, if suppose in consolidated financial statement you have sold one subsidiary, so this is also not a discontinuing operation. Understood? Yes, sir. Correct. This you can read. The next point is what? Initial disclosure event. This may be also important. When we should start disclosure. So what they are saying? They have given two dates. Whichever date trigger first, that date will become initial disclosure event. Means from that date AS24 will be applicable. From that date AS24 will be applicable. That is known as initial disclosure event. So initial disclosure event will be A or B, whichever occur earlier. So first, the enterprise has entered into a binding sale agreement for substantially all the assets of the discontinuing operation. So can you say if you have entered into a binding sale agreement which you are committed, so that date will become what? The initial disclosure event. Or if there is no binding sale agreement, but the enterprise board of directors or similar governing body has approved the detailed formal plan, of discontinuing operation and has made announcement of such plan. Can I say once we announce the plan, it means we are committed to it. Otherwise we will never do announcement now. So once I announce any batch, it means I am committed to that batch. Otherwise we will not do announcement. Will not do the announcement. So once we are announcing means we are committed to take that batch. Understood what I am saying? So approve the detailed formal plan of discontinuation and made announcement of such plan. So this will be the second event. Whichever occur earlier, that become initial disclosure event. So this can be asked in a case study based question. They will give you two events. Which date will be the date from which AS24 will be applicable? Whichever occur earlier. Understood? This you can read. Okay. Then presentation and disclosure. This also you can read because they may ask a theoretical question based on this. Means if they are asking, it means they will ask write down the disclosure about AS24, which I think not expected. But if they ask, don't blame me. So these are presentation disclosure. Can you read by your own? Okay, na? I think only in this particular AS24, meaning is important. This is important, and they may ask question of initial disclosure event. Chalega. Okay. So AS24 is also completed from examination point of view. In class, so we have done detailed discussion of each point. Huh? So when you are doing revision, so whatever I am not reading, that you also read. Okay. Okay. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye.